Samora, let's kick off with, I suppose, a key focus for the markets today is, of course, the CBK decision on interest rates. It looks like most analysts are pricing in the fact that they're going to have a neutral stance. We know that Uganda chose to keep their rate on hold yesterday at 21%. Food inflation is a big problem right now. Your thoughts on the decision today?
I think there are no clear indicators that would warrant a reduction in the CPI. In as much as inflation came in at 13%, there is still the fact that the CPI was still rising to around 133. So from an inflationary perspective, there's no clear evidence for a reduction in the CPI, in the MPC.
So no clear evidence. Does that mean that you're standing on the side of the 8 out of 12 Reuters polled economists who are looking for rates to be kept on hold at 18%?
Yeah, I think the rates should be kept on hold from that perspective. However, I mean, I've always maintained that the rhetoric with regards to the MPC decisions is so mixed, because there's, on one hand, there's IMF that is committed to reducing inflation and within a target of 9% in the short term and 5% in the long run. Then there's the fact that you also have to look at economic growth. And from that perspective, for one, the residential construction is significantly lower than it was in the same period of last year. And that would probably warrant a reduction in the CBR. But I think overall, there's no clear indicators that would point to a reduction in the MPC.
Is it a fact that because the CBK and, of course, the Kenyan government needs the funding from the IMF, their hands are in fact tied? Because we've got, as you say, the evidence that the high borrowing costs are really starting to hurt the local economy, but it seems like the Kenyan government and the CBK doesn't have much leg room to change those rates and bring them down.
Exactly. I mean, that the hands are tied because you've already committed around $750 million to fight inflation through the extended credit facility that the IMF was offering. So if you have the IMF clearly has a lot of leverage on the CBK, and from another hand, you're going to have a syndicated loan facility of $600 million, and of which I'm sure a lot of those creditors, some of the terms that they'll have given to CBK is for them to fight inflation and to show their inflationary credentials. So from that perspective, the foreign lenders have got a lot of leverage, and for them, I think their main perspective is to bring down inflation, and that's why you might see the MPC retaining its rate at 18%.
Let's focus in on Safaricom, of course, now the second largest listed stock on the exchange after Ebel. Strong trade coming through. Full year results are expected next week. But just let's focus in on issues that could affect earnings going forward. The mobile termination rate is now going to be cut to 1 shillings 44 cents. That's from 2 shillings 21. That's a 35% cut. How vulnerable are their earnings as a result of that fall in termination rates?
I mean, for one thing, Safaricom has around 3/4 of the market in terms of subscribers. So for them, in terms of the mobile termination rate, it hits them harder than it hits the other, because there are more people calling outside of Safaricom. And I think that's what they're looking at. Last time there was a reduction in the MTR in 2010. The price was in the market, and that affected Safaricom's EPS. And I think that's what a lot of investors are pricing into Safaricom going forward, is that a reduction in MTR will inevitably bring about a reduction in voice costs, and that will obviously affect Safaricom negatively.
We had Bharti Airtel's results out yesterday. That, of course, would be their global results, but showing that their profits have fallen for a 9th straight month. We know that one of the key competitors that Safaricom has in Kenya is Bharti Airtel. The fact that Bharti is really struggling to turn a profit in Africa as well, does that really prove the case for investing in the likes of Safaricom and indicate its market dominance is here to stay for some time?
I mean, I think the interesting fact about BAT is that when they rolled out their strategy for lower calls in Africa, that was the same time that there was a spike of inflation beginning within the continent from East Africa as well as West Africa and Southern Africa. So maybe their strategy was curtailed by the fact that when you're reducing the costs, there's also the fact that people's pockets are being pressured by inflation, and therefore they can't spend more on calling. And maybe it may take time until inflation stabilizes for their strategy to pay off. And I think from that perspective, I wouldn't be so rushed to negate their strategy. I think it still has, it could still work in a less inflationary environment.
Samora, let's quickly shift focus looking at Mumia Sugar. We had some strong foreign sales coming through for that stock yesterday. It still managed to close high at 5 shillings 30, but that's at a time where we're seeing raw sugar futures edge low. We saw the ICE July raw sugar future dip by 1.9% yesterday, and that's a year low. What is the prospect for Mumias in light of the fact that sugar prices have been trending lower globally?
I mean, sugar prices trending lower globally may not affect Mumias strongly because the biggest market is in Kenya, and of course the whole import duty issue, the sugar, it may not affect them negatively. However, the key things with Mumias is for one, the cost of doing business in Kenya, which has been rising because of course, higher wages and higher inflation and higher electric costs over the year. So I think those are some of the things that would affect Mumias heavily. We saw the effect that the new MD had on the stock price, but that has by and large withered out. So I think from Mumias, we need to start seeing concrete steps to show up their strategy, increase the supply as well as the availability. If you look at Mumia's yield over the last few years, they've been producing less sugar despite having more sugarcane. So from a productivity perspective, they need to improve productivity for investors to come into the stock.
Do you hold the stock at all? Would you invest in it?
At the moment, I wouldn't invest in it because I think there are better options outside the sugar industry right now.
Samora, great.
And some of those options include companies like EABL, which has shown resilience. And so, yeah.
No. As you say, that stock, EABL, really receiving strong foreign participation in it. That stock has been driving higher. In the meantime, we'll have to leave it at that for today. Samora Kariuki, research analyst from NIC Securities.